Hello, everyone. Welcome in to another edition of 11 on 11. We have a handful of things to cover today. We're first going to talk about Intel's quarter and if you can buy the stock after looks like about a 12 to 13% decline. And then we're going to go over two names in healthcare, a credit card name that I'm still watching, and perhaps the most interesting chart in the Mag 7. But let's start at the beginning, which is with Intel. If you weren't paying attention, they reported last night after the close and the stock fell 5%. And then after the conference call got going, it fell another 5% and ended up closing the post-market session down around 10. And it has extended those losses today. As I look at 10:11 a.m., it's down 15%. So I'm going to quickly share my screen, what I'm looking at. Hold on. This is a 1-year daily chart of Intel. As you can see, 1 year ago it was trading at $21, peaked at $55. Now it's at $45. But I mean, 22 to 45 in a year, that's still, you double your return, that's 100%. But down today, 15%. Let's zoom in, make it a 6-month. In blue, we have the 50-day. In orange, we have the 100-day. And in red, we have the 200-day. MACD still bullishly inclined, where you have the orange line here above the blue. Histogram is positive. RSI is back towards 52. Not great, not bad, especially when you're coming out of overbought. This kind of, at least to me, I read this, it's only 1 day, I read this as that it's going to need to consolidate here. The good news is when you look at it here on this chart, it got bought at 44.7, which is still above the higher high it made in December. Let's quickly change this view and take a look at another 6-month view, but with different moving averages. In blue, we have the 5-day EMA. In orange, we have the 13-day EMA. And in white, we have the 20-day simple moving average. So it lost both the 5 and the 13-day, but it looks like it's clawing back. If you wanted to get into this position in Intel, I would wait until it reclaims the 13-day or the 5-day, or better yet, successfully retests the 20-day. Right now, in between these moving averages, a day after, let's just call it a material letdown, this is not something that I see people diving into unless you see this get bought up strongly over the next couple of days. You get back above the start of this, the top of this candle at 48. For those of you who didn't get a chance to look at the quarter, it was okay. They did everything they could. The issue is that they simply just don't have the supply. They can't make chips fast enough. You're getting to a core weave issue where it doesn't really matter how much money people are giving you. You're at the point where you don't have the physical capacity to make good on these orders. And at $55 a share, the market was simply pricing in capacity that Intel didn't have. If you want to play this without getting into Intel, because the quarter was good, demand is strong, I would actually go ahead and look, and I'll go back to this a 1-year chart here. I would look at ASML. They are one of their premier capital equipment manufacturers. Is obviously near an all-time high. In fact, let's go to a weekly chart, a 2-year weekly. Yeah, I mean, this is an all-time high. 2 years, 5 years. I mean, you can make the argument extended, but you do have 50-day weekly moving average crossing above the 100-week, which is a sign of positive momentum. You like when shorter-term moving averages go above longer-term moving averages in the same period. So if you don't like Intel here, you can arguably go ahead and jump into ASML, which is one of their biggest partners, because you know that Intel is going to be racing to meet capacity, and that the way that Intel gets to that concern is by working closer with ASML. And if you look today, it found support right at the 5-day exponential moving average. Is the 6-month of ASML. MACD, again, very positive, oversold on the RSI, but it keeps staying in this oversold reading. The same way that, overbought, which is an RSI above 70. The same way that stocks that are oversold can stay oversold, and overbought stock can stay overbought. And this stock has been overbought since January 2nd, the start of the year, and it's up 380 points off of 1,000. So what? That's 30, almost 40%. Let me think about that one. 38 divided by 1,000. Yeah, 38%. I mean, it's been oversold, keep saying that wrong. I'm so used to looking at stocks that are oversold. It's been overbought for 38%. It's impressive. I got into Intel I sold a little up 10%, and then when we went to the quarter up 20, I sold half of the position. In the post market, I sold another 30%. I had some covered calls on the last 10% this morning. Rebought those covered calls, made my entire premium back, and sold the rest up. It was a positive trade for me, and I'm just not interested in playing the Intel game. I feel like the easy money has been made, and now that we have a quarter that questions consensus, it's going to need to consolidate for a little while. So I'm going to focus on other names in my portfolio, and especially my tactical portfolio, that I think have an easier path to upside. And we'll start with a name in healthcare, Novo Nordisk. This is that 6-month chart with the 5-day, 13-day exponential, and the 20-day simple. You can see here, we finally broke above 62. 62 was the high in September, and it's the highest it's been since gapping down when they reported a quarter in July of 2025. So it's been a long time since stock's been up 64. In my opinion, you got to break out in progress. We overbought in RSI, and MACD remains bullish, where you have the trend line over the signal line. If we zoom this chart out a little bit, and we'll take a look at some of the more intermediate terms moving averages, you'll see that we're above the 200-day in red, we're above the 100-day in orange, and we're above the 50-day in blue. In my mind, it's 64. If we go right through this, I think you have a date with 60, 66, 67. I'm looking to take profit at 69. I am in at 57, so I'm up 11% right now, which is nice. But there's nothing in this stock that's telling me to sell it. If I look at a weekly chart, we're actually above the 50-week. So I don't see a lot stopping us here. I mean, you can kind of name your price. If this weekly chart kind of tells me that 70 is where I should look to sell. 58. That's just my opinion, but this is a breakout in progress, and I think you could buy it here with an exit price of 70, and you can use, let's see here. You can use the bottom of this breakout candle as your exit. So you can say, if this stock falls below the open of today of 63.25, I'll sell it there. You're taking 75 cents of risk for $6 of reward to 70. That's how I would play Novo. Another stock worth looking at in healthcare would be UNH. I've been following this one for a while. I got in a little bit early, but my patience has paid off. We finally, after making a handful of attempts of it in early January, are above the 200-day. And it looks like we're going to have the 50-day cross above the 200-day shortly. That's a gold cross. That tends to bode well. It's a bullish omen for stocks like this. While it's giving up a little bit today, I think you can buy this stock today, use this cluster of moving averages here, say 335 is your stop. But if we get above, if we can maintain this breakout above the 200-day, the next level of resistance is 380. But I think this stock can go pretty quickly to 400. So we're going to take $20 of risk for $30 to $50 of reward. Not bad, not great, not the most compelling, but this to me is not a tactical trade the same as Novo or INTC. For those of you that aren't familiar with this name or are just broadly familiar with the trouble it's had, this stock not too long ago was at $630. Now, it got beat to for a good reason. It deserves to be where it is. But when you get a stock like this that is a permanent compounder in healthcare, you can make the case that it was oversold and that maybe you deserve to be at 450 sooner rather than later, that the market overreacted, and that this could be a really nice long-term position for somebody, especially for those that don't have a lot of exposure to healthcare, which really hasn't made a lot of sense with the exception of the last 3 months, where names like Merck, Eli Lilly, and Novo Nordisk are. Speaking of Eli Lilly, a little bonus for you guys. I'm actually in this name as well. I bought it when it broke above the, sorry, I'm trying to find the right chart for us here. When it broke above the 50-day, this candle. So I bought here. I'm even on the position right now. So I bought probably around 1050. It's at 1080. But if this stock can regain its momentum with MACD, looks like the trend line's about to go above the signal line, which would be bullish, and RSI is around 60. In my opinion, RSIs that are positively trending around 60 tend to make it to 70. You tend to get into that overbought territory, get a blow off top. There's no reason why Eli Lilly can't make a new all-time high. However, if we get stuffed at 1,110 and you go down, you could start looking at a head and shoulders pattern. But, until we see it, I want to give Eli Lilly the benefit of the doubt. They still have the catalyst of getting approval for their GLP-1 pill, we haven't got that yet, but it is in the works, and it's expected within the next 2 to 4 months. In other words, it's expected in the first half of 2026. Now that we've moved through the healthcare names, let's talk a little bit about my favorite credit card provider, American Express. This name right here took a nice gap down when we talked about the 10% credit card cap. We're 3 days past the January 20th deadline, and really nothing has come of it. I understand that Trump has urged Congress to find a way to pass something to make it happen, but I have a feeling that it just isn't going to happen. So sandwiched between the 100-day simple moving average at 353 and the 50-day simple moving average at 367, I think you can start a position here. You can get out if it falls below the 100-day, or if you want to wait for this to go either way, you can wait until it bursts above the 50. But I'm in it right now. Maybe I'm early here, but I prefer American Express to Visa and MasterCard. American Express is leveraged to the, let's call them the premium consumer that travels. And from what we heard from Delta, who actually have a card with American Express and United, a majority of their revenue, or sorry, a majority of their profit is coming from people buying these first class tickets. I'd prefer to go with a company in the credit card space who you don't have to worry about the credit quality of their consumers. That's not to say that Visa and MasterCard won't work. They're great companies, but I prefer niche market as opposed to wide market when it comes to investing in the credit cards. And as promised, we will finish up with the most impressive chart in the Mag 7, and it's Apple, but not for the reason you think. So we are going to go we're going to go with a 2-year daily. We're going to get rid of OBV, we're going to get rid of MACD, and we're going to focus on RSI. So here in April, the tariff tantrum of 2025, Apple reached an oversold reading of 19. It hasn't been that low until yesterday. I started a position here. Now, truth be told, I'm probably early. If Apple has a quarter where their iPhone sales are on target, this is going to pop right through 30. The oversold condition is going to be rectified immediately to the upside. But technically speaking, I should have waited for oversold, which hit 16. It looks like 3 days ago on the 20th. I should have waited for the 16 to get rectified back to a 30 and broken through, because as I mentioned earlier, oversold stocks can stay oversold. But when I think of a company like Apple, where the reliability of their cash flows through Apple services is second to none, I'm willing to give them the benefit of the doubt. So if you wanted to trade this and get into it, and this is how I'm actually treating the trade now. Let's just zoom back in. We'll do 6 months here. We saw some buying at Apple at 242 on January 20th, which was the day that you made a new, let's call it 104-week low on RSI, which means that you are statistically the most oversold you've been, the most beaten up you've been since the tariff tantrum, and then you got bought up. So if we have a close below 243.08, I think is the low of this candle, then I'm out. At 247, I'm taking $4 of risk, which on a $250 stock is like 1.5%. And if this all works out post earnings, I feel like I could take profit at the 100-week simple moving average of 260. So, I'm playing for 5 to 6% in the very short term. But with a company like Apple, I feel like you can hold it a little bit longer and not be overly concerned. So I might hold this until it goes back up to 280 or 288, try to avoid having to deal with a double top scenario, because if you were to correct yourself here and go up there, that's what people will be talking about. But in my opinion, when you have a blue chip stock like this, where the only thing that's changed is sentiment and nothing else, because the fundamentals should be intact, we have really good signs out of China, I think you take a chance, you grit your teeth, you buy it knowing it's not perfect, maybe a little bit early here, and you get out, you use your discipline, you get out at 243 and change, but you could hold this until you get a retest of the all-time high, because I think if we get a quarter where the iPhone story is as good as we thought it was just a few months ago, and there's no reason to believe that that's changed, then this stock goes back up there quickly. That's it, guys. So we went over Intel. I'm out of the name, but if you want to get in, The chart isn't the worst looking thing in the world, but I prefer getting into ASML instead. We talked about the opportunities in Novo Nordisk, UNH, and also a little bit in Lilly. Then we went over American Express, and we finished up with the most interesting chart in the Mag 7, which is Apple, and I gave you a trade to take advantage. I certainly think I left you with more than you came with. I appreciate you stopping by. Good luck out there. And I am in Ohio next week. You probably won't hear from me. If you do, it won't be as well put together just because I'll be rushing. It's a very busy week. It's also a very cold week. However, you will likely see me with Alvaro on Charts and Checks. Speaking of, the most recent edition we recorded yesterday was with one of his mentors, Don Lett. Great podcast. The dude is incredible. I mean, to borrow a phrase from my friends in New England, wicked smart man. Yeah, I learned a lot, and I'm going to have to change up some of my screens that you see here because some of the stuff he had there was, next level. I appreciate you all stopping in. Sorry about the voice and everything. I'm fighting off a cold right now. Maybe, I don't know, whatever. But thank you guys. Take care. Good luck out there. Bye-bye.